Gold and Bitcoin, number one and number two assets. Never before has that happened, where gold and Bitcoin have been the two best performing assets globally. And it's because people realize they are never, ever, ever going to stop printing money. And therefore, non-productive assets are outperforming productive assets. So what does that tell you about the performance of the productive assets? It's all devaluation of the currency.
One of the most vital points he makes is about your denominator, your measuring stick. If your wealth is measured in dollars, then gains in stocks or real estate may look dazzling. But if your true benchmark is Bitcoin, a non-printable, scarce asset, many of those same gains look like losses. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
I was woken up. They finally realized what Bitcoiners and gold bugs have been yelling about for 15 years is governments around the world were given a money printer. When they were given that money printer, they were trusted to be responsible with it. And instead of not violating that trust, they decided to just press the button as much as they possibly could. And as they've printed more money and they have devalued the fiat currency, the rest of the world at first was like, this is amazing. Stocks are going up, real estate's going up, I'm getting richer. But now people are saying, wait a second here. I actually think that I'm not driving real wealth. So opening bells, Phil Rosen, he came out and he showed the S&P 500 since 2020 is up 100%. Great, fantastic. Congratulations to all the stock owners. Priced in Bitcoin is down 90%. So what is your reference point? If you're measuring it against dollars, then you think you're a genius. If you're measuring it against a finite asset that cannot be printed and cannot be debased, you're losing horribly. And so it's all about that reference point, that denominator, right? The idea of a Bitcoin is the hurdle rate. And so I think that now you're starting to see this seep all around the world. Now, what I will say is Bitcoin versus gold is also a very interesting story. Gold is up 50% year to date. Congratulations to all the gold holders, right? Gold bugs, you guys were right, but not so fast. If you go back and you look a year ago, then gold is still up 50% because it pretty much was sideways for like a decade. So it has had this rapid appreciation. What we know though is gold accelerates before Bitcoin many times. And Bitcoin, if you go back over the last year, it is up it's up 100%. So over the year to date, you have gold up 50, Bitcoin only up 35. Okay, gold's winning. Over a year though, you have gold up 50, Bitcoin up 100, Bitcoin winning. If you go back 5 years, oh boy, gold's up 100%, Bitcoin is up 1,000%, 10x what gold has done. So both of them have a place in somebody's portfolio, I think. But if you're looking for the asymmetry, people are going to flow to Bitcoin. And what I think you're seeing now is the thing that the individuals have been yelling about on the internet, debasement, inflation, currency manipulation, loss of purchasing power, all that stuff. Now the institutions are saying, wait a second, we agree. We're going to lend our institutional credibility to this. Now it's being called the debasement trade, right? Like they invented this new phrase that no one's ever come up with before. No one's ever thought to buy Bitcoin and gold. And Charlie Bolello, creative planning, he came out and he showed that gold and Bitcoin, number one and number two assets. Never before has that happened, where gold and Bitcoin have been the two best performing assets globally. And it's because people realize they are never, ever, ever going to stop printing money. And therefore, non-productive assets are outperforming productive assets. So what does that tell you about the performance of the productive assets? It's all devaluation of the currency. And I think that's why you're going to start to see so much more capital continue to go. I think that this bull market is just warming up, baby. We're on the on-deck circle. The game hasn't even started yet. Bitcoin is going to be bigger than gold's market cap, right? Just think about it this way. Name an asset where the analog version is bigger than the digital version. You can't, right? Because the digital version is always bigger than the analog version. Now, right now, what has happened is gold has been running. Gold is like a $27 trillion market cap. Huge. Congratulations. Bitcoin's 10% of that's 2.5 billion, give or take, right? Or sorry, 2.5 trillion. So what you're seeing is the people who have the largest pools of capital, central banks, large financial institutions, governments, etc., they are trained. I see debasement, I see inflation, I buy gold. So they're pouring capital in there. But again, Bitcoin's performance has doubled in the last year, gold's performance. So that means that on a relative basis, Bitcoin is seeing more inflows than gold is seeing. And so what you should expect is that gap is going to close. Right now, it's 10 to 1. Eventually, it's going to be 5 to 1. Eventually, it's going to be 1 to 1. Eventually, Bitcoin's going to be bigger than gold. And so how long does that take? I don't know. Is that a 5-year thing or is that a 50-year thing? I have no clue. But what I do know is that if you put these two assets side by side, Bitcoin is superior in every single category that you can analyze these two on, except for gold has a couple thousand years of history. Bitcoin has 16 years of history. So from that standpoint, gold is superior in terms of how long it's been around. But in terms of portability, divisibility, scarcity, mobility, all of those things, Bitcoin is superior. And so if an asset is superior, it should over time have a larger market cap. And I think that's what you're going to see happen with Bitcoin.
One of Pomp's more provocative claims: BlackRock is a Bitcoin company. If your most profitable product is a Bitcoin product, then you are a Bitcoin company. And increasingly, BlackRock's advisors, distributors, and institutional wings are spreading the gospel of Bitcoin.
It's because the clients want it. I always say the voice of the people will eventually be heard. Maybe not in the short term, but eventually the voice of the people will be heard. And guess what? The people want Bitcoin. And so you see the banks now all of a sudden, they're capitulating. You see the Vanguards of the world, they're capitulating. You see the Morgan Stanley saying, the financial advisors are pounding on their door saying, my client is telling me they want access to this asset. When can we get it? Now it goes into a model portfolio. And part of what was actually interesting about the Morgan Stanley thing is they said, we are going to support our 16,000 financial advisors as they look to service their clients. And they can now add this into the portfolio. And so again, you can say they're crying uncle, you can say they're waving the white flag, you can say they're surrendering, you can say whatever you want. I like to say the positive side. Welcome to the party, right? Welcome to the greatest asset on Wall Street. Welcome to the greatest show on Wall Street. Thankfully, you now can service your clients. But at the end of the day, like the people's voice is being heard and people are saying, we want the asset. And so what ends up happening is either you're the Vanguard CEO who says no, and you get steamrolled and you're out of a job, or you say, I'm going to give the people what they want. Let people do what they want with their money. That is a pure principle that I think should happen in finance. If people want to do something with their money, it's their hard-earned money. They already got to pay half of it to the government, which is crazy. But whatever's left, the peanuts that are left after they go and they serve Uncle Sam, after that, let them do what they want with their money. If they want to buy private assets, let them do it. If they want to go and they want to gamble it, I don't do that. I don't think that they should do that, right? I don't think that's a good idea from an investment principle standpoint, but that doesn't mean we shouldn't protect their right to do it. It's the whole idea of free speech, right? Money is speech, especially when it is in digital form. Let them express their speech how they want. Let them do with their money what they want. And so if they want to buy Bitcoin, let them buy Bitcoin. If they want to go and they want to buy some crazy thing, let them do it. Do your best to educate them, but people should have free will. That's what made this country so amazing, is letting people have freedom. And guess what? People are smarter than you think. For every one story of somebody who goes and gambles away all their money, 5 or 10 people actually got to some level of prosperity because of capitalism, because of market access, because of the ability to allocate their capital. And so, yes, will there be side effects and negative trade-offs? Of course. But guess what? So is there's negative trade-offs by letting humans drive cars. So is by us having food that tastes good, right? There's all these things in society. It's okay if there's negative trade-offs, just try to minimize them, but do not take away the freedom of people to do it to what they want with their money. And I think that's what all these institutions are learning is now, if you don't let them do with their money what they want, they will leave because now you have competition. And there are plenty of people who are willing to let them do what they want with their money. Well, Larry Fink is the CMO of Bitcoin. I've been saying that for like 2 years now, but more importantly now, I'm going to actually take it a step further. BlackRock is a Bitcoin company. They're the most successful Bitcoin company in the world. And people can get upset about that. They can not like it, but it's true. If your most profitable product is a Bitcoin product, you're a Bitcoin company, right? Guess what all of their financial advisors, guess what their distribution partners are all doing? They're going and they're spreading the gospel of Bitcoin. They're telling people, here's how it works. Here's why it's important. Here's why you should have it in your portfolio. BlackRock may be doing more for Bitcoin than companies that are solely Bitcoin companies. Again, you need everyone. You need the BlackRocks, you need the Coinbases, you need the hardcore Bitcoin maximalist companies, and you need the individual node operators. Everyone's on the same team. They may have different tactics. They may not think that they're working together, but that's the beauty of Bitcoin, is that there's no centralized coordination, but everyone's on the same team. They're on Team Orange. And BlackRock is a Bitcoin company. You can say they're not. You can pretend they're not. They can pretend they're not. They're a Bitcoin company. It's the most profitable product. Guess what? If BlackRock became a Bitcoin company, everyone else is like, I'll become a Bitcoin company. If I can have a really profitable product like the Bitcoin ETF, like sign me up, right? And so I think that's what you're starting to see, is that people are realizing, wait a second, this asset is not going away. I see it when I go on TV all the time, right? When I go on TV, it used to be, they would laugh. They would literally like, oh, here comes like the whipping boy, right? Like, oh, let's just pummel this guy. This guy's a moron, right? And we're going to make him look stupid.
Will Bitcoin overtake gold in market cap? Maybe. Will institutions fully embrace it? He argues that shift is already underway. But beyond predictions, the deeper insight is this: the frame through which you measure your wealth matters more than ever.